All right, time for today's three-stock lunch, folks. Here with our trades is our friend Boris Schlossberg. He is Managing Director of FX Strategy at BK Asset Management. He is also, by the way, a CNBC contributor. First up, Boris, Hewlett Packard Enterprise stock on track, best day in years. After the company topped second quarter earnings and revenue estimates, your trade on HPE.
Yeah, cheap stock with improving fundamentals. There's very little not to like here. It's essentially really an inexpensive way to play AI. They improved because their server businesses really improved because they were able to finally fulfill a lot of the AI demand they had there. It trades at 9 times versus 19 Dell and 40 SMCI, so there's a tremendous amount of discrepancy there that I think is very favorable to it. And generally, I think, as it goes forward, the stock looks quite attractive. It's a slow and steady stock, but it could really have as much as 50% upside in the next 2 to 3 years. And for conservative investors, the interesting play here is you can sell the December 24 calls for a 22.5% yield plus a 2.5% dividend as far as the trade goes. I think it's just a generally good quality stock at this point because they're going to ride that AI wave, hopefully to more profitability.
Up 16% this year. Let's move on to Campbell Soup. A totally different segment here. I don't think there's an AI play yet with Campbell's that I've heard about, but they did beat earnings and revenue. Said the snack business is facing pressure from a pullback in consumer spending. The shares are mostly flat, and they're actually down 14% over the past year. What do you think of this one, Boris?
I think it's a grandma stock. Campbell Soup isn't going anywhere. Its internals are actually better than the industry. So, for example, the industry margin is around 5%. Their margin is 8.25%. If they can just make the snack business grow a little bit, or actually they just expanded a little bit. They bought Stavros Foods, which owns very popular Rao's pasta sauces and pastas. And if you can grow that business, maybe acquire something else that has a little bit better growth, they should be quite okay. Again, this is, I think, a sort of a similar stock where you can sell the 47 calls for Jan 25. That's a 17% total yield plus a very nice 3.5% dividend. As I said, it's pretty much a widows and orphans kind of a stock. And at this point, having flattened out and looking better on its free cash flow, it should be a pretty good play going forward.
All right, let's move on to Lululemon. On deck to report its first quarter results this afternoon. The company has been faced with some slowing sales growth and concerns over growing competition in athleisure. Shares are down about 1% today. What's your trade here on Lululemon and the enduring appeal of leggings?
Yeah. Yes. So not a stock that I want to own right now. I'm neutral on it. It's not that I don't like it, but I'm neutral on it. The bear case here is that Lululemon could become like Under Armour, essentially irrelevant going forward. I don't think that's the case. There's a tremendous amount of loyalty, and if I go by my wife alone, there's a tremendous amount of loyalty amongst the female consumer base. But I think the big story with Lululemon is, can they expand overseas? Can they convince female consumers in Europe, in East Asia, for example, that athleisure is a respectable wear, clothing? If they can expand those markets, if they can, leap that cultural gap, I think the growth can really go forward. But that's something I'd like to see in the next 2 quarters or going forward before I would commit any capital to it. Right now, I'd like to just stay away because
it's interesting too. I mean, we had a segment last week on the return of denim, of all things, and very wide flared denim pants, which is exactly the opposite of stretch tight leggings. I mean, so we wonder whether that day we've reached peak legging.
Maybe. Tyler, I'm just waiting for the big sideburns to come back. I'm old enough to remember those too.
What do you think of the market right here? We've got a Fed meeting next week. Is the market likely between now and Election Day to sort of tread water?
It's the consensus view. It's my view, but it's been the Terminator market. I mean, it just keeps going up and up and up. And, ISM today surprised to the upside. I think everybody's looking for the economy to roll over and die, and it just refuses to do so. So the easy call is to say, yes, we're probably going to roll over. But the hard call is actually to stay long and strong at this point as it keeps going up. So I've been chastised by the market for sure.
All right. Well, we've all been schooled by Mr. Market at one time or another. Yes. Boris, thanks. Boris Schlossberg, we appreciate it.